Odd Burger is a food technology company focused on transforming the fast food industry. Odd Burger leverages automated cooking technology, a vertical integrated supply chain, and is rapidly growing through a franchising restaurant model. We've got CEO James McInnes here telling us all about Odd's path and strategy in the coming years. I'm Martin Gagel with Market Radius Research. It's Tuesday, November the 19th. Please remember this is neither a recommendation nor investment advice. We're here to learn about the company. James, thank you for joining us. Great to have you here. And please tell us about Odd Burger.
Thank you so much for having me, Martin. It's a real honor to be here. Odd Burger is a publicly traded company. We're on the TSXV under the ticker ODD, ODD, and on the OTCQB in the US under the ticker ODDAF. Odd Burger is a technology company transforming the fast food industry. And really, we are transforming the industry through doing things differently, hence the word odd. And it really is at the heart of what we do. We really think different, and we're really trying to make the industry into something better and new. First of all, Odd Burger is a vegan fast food chain. So we use 100% plant-based ingredients. These are also more sustainable and, of course, delicious. And we do this at prices that are comparable to other chains. We're also a national chain. We have over 20 units in operation in 4 provinces in Canada. And we have a number of new units coming up both in Canada and the US. We're growing through primarily a franchise model. So we're rapidly expanding in Canada and the US. We have over 136 locations in our pipeline. So these are signed franchise agreements. So there's a lot of growth that's already baked in. We also have a retail food line. So this food line is in grocery stores. We're currently in over 40 points of distribution, primarily in Ontario. We have 5 different products listed in grocery stores across Canada. And what makes Odd Burger special is not just the fact that we use sustainable food. It's not the fact that we're vegan. We are really a tech-focused company. And when I first started this company, I came from a tech background. So I'm a computer scientist, and I formerly had founded a financial technology company for about 9 years. So really, my goal with Odd Burger was to bring a lot of my experience in automation and technology into the food business, and we've done that by really having our restaurants use some of the most innovative technology that's currently available. And we also plan on greatly expanding that with hopefully a fully autonomous restaurant coming up. On the food technology side, we also manufacture our own food, and this also is quite unique. This gives us a fully vertically integrated supply chain, meaning that we manufacture the food, we sell it to Cisco, and Cisco then sells it to our franchise or corporate locations. And really, this allows
Sorry,
us to,
James.
yeah.
Sorry, for people who don't know the world of food distribution, Cisco is a huge food, or maybe even the biggest in the world of food service distributor. They supply all the big restaurants and so forth. They're not the networking California company. So it's SYSCO. So
Yes, exactly. Yeah, and they are, and to your point, they are the biggest in the world at distribution. So really, what we're really trying to do here is really transform the fast food industry, not just from what kind of food is served, but also how the food is made, how the food is manufactured, and how it's cooked at the restaurant. And really, it is all about the food. Odd Burger is not trying to be a salad chain. We're not trying to be a completely health-focused chain. Our focus really is on disrupting traditional fast food. So if you look at these pictures here, you'll notice here's a burger that looks very similar to another chain that you might recognize. But the point is we're really trying to give people food that they're familiar with and they love, but that's healthier and at about the same price. So our menu really is complete. We have like ice cream, milkshakes, burgers, fries, wraps, and we do this that's comparable in price to other chains. Now, the fast food market as a whole is obviously quite big and growing, continuing to grow. Growing. So it's expected to reach 1.46 trillion by 2028. So that's obviously a very, very big industry. Now, what's interesting though is that the vegan fast food market in particular is growing at about twice the rate, according to a number of studies that I found. And I think if we look at other, kind of better for you QSR chains like Cava and Sweetgreen, I think people realize that consumers want something different. Consumers want something that is going to give them some health benefits. but at the same time, satisfy their cravings. And really, Odd Burger, I think, does this better than anyone else in the industry. I started the company actually because of a personal health journey. I was diagnosed with high blood pressure back in 2013, and I was really looking for a way to improve my health. So I went plant-based for 30 days. And it had such a profound impact on my health that I was cured of these ailments within a month. And that was so shocking to me that I really wanted to let the world know that, the power of food. And that's where I kind of dedicated my life to bringing all my tech background into the food industry and really getting into this industry in a big way. 2015, we launched our first food truck in Southwestern Ontario. 2016, we opened Canada's first vegan fast food restaurant. 2018, we launched our food technology division called Preposterous Foods. And then in 2021, we went public. So we've been on an amazing journey, and today, we are one of the world's fastest growing vegan fast food chains, without a doubt.
Going back the slide there, you launched Preposterous Foods. Is that the division that manufactures? Is that the food manufacturer that makes the patties and the different ingredients, or is
Yes.
that some other sort of technology aspect?
That's our food manufacturing facility.
Okay.
So we have a facility. We own it. We make all our own food. It's not co-packed by anyone else. We do it end to end. So it's really critical component of our offering. So currently we have 20 operational units in 4 provinces, and the breakdown of that is we have 6 corporate restaurants, 12 franchise restaurants, and 2 mobile franchise units. Our average corporate stores did around 500K last year, but we are seeing very significant higher unit revenues with the last 3 openings. In particular, our Victoria site is doing close to $1 million. Our Ottawa site is on track to do around the same, and our Edmonton site is doing around what our Toronto location does, which is around between 700,000 and 800,000 a year. So I think as the brand it continues to grow and our brand presence gets stronger, and frankly we just get better at what we're doing. The launches are really producing the kind of results that we want, which is really bumping those unit sales up. In terms of the revenue streams, our franchise fee is $35,000. This is like an upfront fee. And then we also have a 5 to 10% development fee. So that's if we help build the store, we charge a fee for that as well. But the recurring revenue is actually pretty interesting here. So we charge a 5% royalty, a 2.5% ad fund, and about 20% of the total revenue comes back to Preposterous Foods in terms of food purchases. So because we're supplying the food to the restaurants, a lot of that revenue stays internal to Odd Burger instead of going out to other companies like Beyond Meat or Impossible Foods. So it really is, an important cornerstone of how we're growing.
And you make margin off of your food sales to Cisco, and that which then sells it to there. So you've got both of those.
Yeah, exactly. Yeah. So we have margin on the food sales to Cisco. We also have margin on the retail line that goes in the grocery stores built in. Yeah.
All right.
So this is what a typical kind of Odd Burger location would look like. Very sleek, very modern. You'll notice here that we have, self-checkout kiosk. All of our equipment is push button, so there's no grills, there's no cashiers. The staff really is just putting food into machines, and the machines are cooking it perfectly every time. So, I kind of joke that we haven't burned a burger in 5 years whenever we started implementing this kind of stuff. So it really allows us to give a more consistent product to customers. And these stores are pretty compact. They fit in less than 1,000 square feet, so affordable to build. And yeah, I mean, the key here is that they can be operated with as little as 1 person. So, obviously in times when you're busy, you're going to have a few more staff. But the point is that it can be operated with as little as 1 person, which is really important because a franchisee can operate themselves. They can really reduce their labor costs that way. And I think that's really proven to be very important with our growth strategy. And, where are we going with all this automation? Like, where does it lead us? And you'll see here that this is a CAD drawing that our engineering team has put together. And this is automation, so to speak. And the goal really of automation is to allow customers to make a burger the way they want it. and this is the whole point of fast food. The whole point of fast food is that if I go to a fast food restaurant in California, I want it to be the same as in Canada. And to be honest, fast food chains are decently good at that. But let's say you want your burger to have a little bit more sauce, or you like your burger with, a little less lettuce or whatever. Trying to get that defined is very, very difficult right now. So the question is, how do we improve that? How do we give you the burger that you want? And the real only way of doing that is through automation. So our first step is to build the garnish station, which is going to garnish the burgers, because that really is where a lot of the customization comes. And of course, it's going to have a lot of benefits: lower operating costs, increased efficiency, much higher order accuracy, and overall better customer experience. Because the whole point of fast food is that you're getting the same thing every time. And if we can give you the same thing that you want every time, that is something that I don't think anyone's done in the industry today. So where are we today in this project? We've designed the prototype in CAD. The next step is to build it. And that'll be part of our capital strategies to fund that next stage of development. But really, the goal here is to create a fully autonomous restaurant that will allow for mass customizable consistency across all our burger locations. I'll talk a little bit about our food technology. So as I mentioned, we do operate our own food technology facility. We've been operating that since 2018. We produce 11 proteins, plant-based proteins, and 8 dairy-free sauces and dressings. These are all proprietary formulations that we've developed over a number of years. And the food that we make in our manufacturing facility is actually paired to cook at our restaurant. So we prepare it in a way that it can be made to order in a minute at our restaurants. We do that by pre-cooking it a certain amount, so that again speeds up execution at the restaurant without sacrificing flavor. So that's a big part of how the two divisions kind of work together. But if you look at the food and the type of ingredients that we use, we really do focus on more natural ingredients like chickpeas, wheats, and beans, and things that people can understand and feel good about eating. So this is a real kind of cornerstone of what we're doing. We're not trying to serve like ultra processed food that tastes like meat at all costs. We're really trying to provide some nutritional health benefits for people so that they can feel good about eating at our restaurant. And we're just something else to note is that we really are also an allergen friendly restaurant, and a lot of people kind of don't realize how big the allergy market is. A lot of people have various allergies, and we find most of those people can eat at our restaurant because we're nut free. We have a gluten-free menu. We have soy-free options. We have low carb options. So there's really something for everybody, and that market is big and growing. This is what our CPG product line looks like. So if you visit some stores in Ontario and hopefully soon stores across the country, you'll see some of these products here, and these are our 5 different retail products. And right now we're in Whole Foods, Goodness Me, and Sobeys, this retail line has been doing very, very well. It's grown over 127% since January. And we're in discussion with a number of national retailers for broader distribution. So we're really hoping to get a big distribution deal happening soon for our burger on the retail side. On the competitive landscape, there really is only one, I would say, plant-based QSR in Canada. That's Copper Branch. And Copper Branch started a little bit before us. They're one of the trailblazers for sure. They're still franchising. They have a CPG product line in grocery stores. They have over 20 locations. They don't manufacture their own food, but they're probably like the closest to us in terms of maturity. Then the rest are in the States, so including Slutty Vegan, Plant Power Fast Food, Next Level Burger, but none of these QSRs, plant-based QSRs in the US, really have an active franchising program. They have no product lines in grocery stores. Their location counts are not anywhere close to what we have, and none of them manufacture their own food. So there's so many differentiators that differentiate us from the rest of the competitors. I think that we're going to do very, very well in the US market. And if you look at major fast food chains, the big one like McDonald's, Arby's, and Wendy's have no plant-based options at all. It's just nothing you can really eat there, maybe except for French fries. But I guess that, I don't really count that as a food option. But there are some chains that have limited options like KFC, Burger King, A&W, Taco Bell. Those options are typically only one, max two type of options. So it's kind of starting to get into mainstream fast food, but it's nowhere close to really becoming a destination which would attract people to eat there for plant-based options. On our performance side, we've had record revenue for the past 4 years, so every year for the past 4 years. Last year we did about 3.3 million or so in revenue. Gross margins continue to increase every quarter. So these are quarterly financials. So if you look at the line here on the left, this is our gross margin analysis. And we're now at, we've had 6 consecutive increases in gross margin. We're now at 45% gross margin. So it's very, very good. And if you look at on the right, we're our net quarter loss, we only lost 120K last quarter, and we actually would have been profitable if we didn't issue $150,000 in stock options. So the point is the company is really right on the point of inflection of profitability. As we keep opening more locations, it's going to keep driving that profit higher and higher. In terms of our corporate stats, we have around 92 million shares outstanding, 102 million fully diluted. Market cap is currently 28.2 million. 52-week high is 31 cents. We're right there now at 30 cents today. So we're right at our year high. It's actually our 2-year high. So we've done exceptionally well over the past month here, if you can see from the chart on the right. Debt is quite low. We only have around 500,000 in debt, and the warrants and options are kind of listed here, but there's not a tremendous amount out there. What's really, really cool though is that if you look at the bottom right, the insider represents 62% of the company. So these are people that really are here for the long run, that we're going to be holding this thing for forever probably. And close to management is an additional 10%. So these are people that I can pick up the phone and call, that I have a personal relationship with. So all in all, 62% of that float is really people that we know. And myself and my wife, we are the largest shareholders as well, at around 50% total. So public float around 26%. The board is comprised of obviously myself and my co-founder Vasiliki. And our board is just fantastic. Mark Goodman's on the board, President of 7-Eleven, Francois Arbor, amazing entrepreneur. Michael Fricker on the finance side, he has over 25 years of experience, including running Bento Sushi, one of North America's largest franchises with over 900 locations. So really, we have a great team here, and to support our growth and our vision. So I'll just kind of wrap up by just talking about the investment highlights. Really, what we're trying to do is we're trying to create the fast food restaurant of the future. And what does that look like? Well, this is what I think it looks like. It's sustainable, and I think that needs to be a cornerstone of what we're doing here. We have to build for the future, build for the planet, and by making our chain, using plant-based ingredients, using compostable packaging, etc., we really are trying to lead that initiative. Obviously, like automation. So automation is a huge part of what we're doing. Reduces our operating costs, increases efficiency, and the projects that we have coming up, I think, are going to be really game changing in the fast food industry. If we can build this prototype and get our food made by a machine, we're going to see huge benefits to that, I think. And of course, scalability. We're scaling this through a franchising model, so it's a low capital cost for the company to keep growing. We can focus on the tech, investing in the tech, rather than investing in building new restaurants. We have a CPG line, so this retail line allows us to again scale more. We can get into grocery stores. We can have different types of products like mac and cheese, or burritos that you could sell on airplanes. The scalability of the CPG line is just huge, and we're just starting to actually get into that. But most importantly, the food has to be delicious. It needs to be something that people just love to eat, and anyone that's eaten an Odd Burger will say that the food is absolutely fantastic. So, and we really do that with quality ingredients, good recipes, and food that's made to order, so made fresh for you as soon as you walk in the restaurant. So this together really creates the vision for where Odd Burger is going. So I just want to thank you for listening to our presentation, and feel free to reach out to me at invest@allburger.com. Thank you so much.
James, excellent. That was good. You've been busy. I
That's to
you
say the least.
you went through a lot of stuff there. I'm curious, the I guess the most high profile of your different business lines right now is the restaurant. That's where the most obvious. And then you said, I actually didn't quite get the number down, but you described your pipeline, I believe, as being over 100 franchise locations. They've signed deals. Could you just clarify exactly what it means to be on that pipeline? And is that all in Canada or is that in the US as well? Can you just clarify your pipeline and how you see your franchise expansion progressing?
Yeah, I mean, our pipeline is based on signed deals. So it's not just, a maybe this or maybe that. Like these are hard deals that we have paperwork for. So um, and the way that we've done the deals is primarily by selling territory. So we've sold area rep agreements in both Florida and Washington State. Florida for 40 locations and Washington State for 20. So we've already have signed deals in the US, and those area reps are now in the process of developing the territory. So whether that means they're going to build their own corporate store, they're gonna franchise under their area rep agreement. There's a lot of growth that is sort of built in by signing these development agreements, because there's a development quota and they need to hit those targets. Otherwise they lose that territory. Um, so yeah, I mean, and we have similar agreements in Canada. So we have an agreement in Ontario and another one in BC, Alberta. So that really does, fundamentally drive our growth on the franchising side. And it's a model that's used by Subway, and it's a standard kind of franchising growth model, and it's extremely effective.
Because there are businesses that really focus on sort of getting franchises and growing those out. I believe there are a lot of sports figures who've sort of taken the franchise model and get a distribution rights or pick up different franchise restaurants and leverage that. So that increases your scalability as well. You don't have to have your own area reps. You're hiring experienced or experienced groups are contracting with you to open up territories.
Yeah, because the thing is, like if we're going to expand globally, we don't know, for example, what's the best site in Texas,
Yeah.
or we don't have a relationship with contractors in Texas. I don't have any uh, relationship with brokers for real estate, et cetera. So there's a lot of local knowledge and experience that goes into executing a franchise properly. And if you don't live there, if you're not from there, then you're kind of almost just guessing. So really that we bring in that local expertise, we incentivize them, to perform, and we partner with them. And that allows us to really scale anywhere in the world.
And these deals that you've signed up so far, do they write a check up front, or is it just a contract, and if they don't perform, they lose the region? I guess what I'm asking is how much skin in the game do these guys have that signing up a territory?
So our model is around 10,000 per million people to buy a territory. So for example, in a territory of Florida with around 20 million people, you'd have a $200,000 US fee.
Okay.
Yeah, so they're paying that upfront.
Yeah.
So yes, I mean, they're putting quite a bit of skin in the game. So if they don't perform, then they're losing, that investment, which no one wants that to happen. So really we're there to help them to succeed, to help them, be entrepreneurs in their own right. So that's we're all really aligned on the success of both the franchise units and also the area reps.
You said they've got minimum targets to hit. Can you give like what your like given those assuming the minimums get hit, what's the minimum amount that would be opened next year, or what can you say in terms of the minimum expected growth given these agreements you have?
Well, next year we're expecting, based on the agreements, to open an additional 10 to 15 sites. So
Okay.
that's around what we're expecting, and we're expecting some of those to also be in the US.
Okay.
So the way the development agreements work, it kind of starts slow, so we only maybe require one the first year, and then maybe two the second year, and then it just ramps up from there
Okay.
as they get more experience.
Let them get their feet wet and figure it out and not rush
Yeah,
it since it's still a fairly early stage brand and model.
exactly. Yeah.
Okay. You mentioned that your last three locations in Canada were doing much better in terms of revenue per store. I think your average being 500,000-ish, and your newer ones were doing closer to 1 million. Is that based on better site selection, or is there other sort of knowledge that you're bringing to the game? Or I guess these more recent ones were franchises as well. Are they just better operators? What drives a higher revenue store versus a lower revenue store?
I mean, there's a lot of factors for sure. But yeah, I mean, one factor, yes, the real estate selection I think has been better. As we've built a number of sites, we can see these ones do better, these ones do worse. So we're going to do more of the better ones in a similar type of area in, say, Victoria. So yes, that has been definitely a factor. But really, I think too, it's not the other two factors are bigger brand recognition. Like as we get bigger, more people just recognize us, more people know us, and maybe people, if someone's going to see us in Vancouver, if they're traveling to Toronto, now they're in Victoria, they see us there too. So there becomes more trust in a brand as it matures. So I think that's another thing that helps. And yes, I think we are making better operators. Our training program continues to improve. We continue to, be able to really guide our franchisees better in terms of like how to better market. What are things you can do to drive revenue at your restaurant, whether it, partner with charities or do local events, etc. So a lot of this has really been from again the maturity of the business and our investment in the training program, and I think all that's just starting to pay off more and more.
Can we talk about your food technology company, where you manufacture your products? You're in Whole Foods. Is that Whole Foods across Canada or just regionally in Ontario? And I presume you're like if it goes well here, that gives you a leg up on going into the US and using their distribution.
Yeah, so right now it's just Ontario. It's all 14 locations in Ontario. So that's where we're starting with Whole Foods. But yes, to your point, probably nothing stopping us from going national, or even potentially getting to the US market, because if we've already tested it on a bunch of stores, Whole Foods would probably have the data to help us to expand. So we're kind of like at that stage, right, where we've really been careful and calculated in our CBG growth strategy, and we want to make sure that the products are right, that the pricing's right, that consumers like it, and that obviously the retailers are happy with the margin. So I really think that we've kind of completed that analysis, and really we're pushing forward now with much bigger deals.
Going to the restaurants, you say one person can run a location, which is I don't know, seems pretty impressive to me. Are there any metrics you have? Let's say the people hours per burger versus you versus McDonald's, or are there any kind of QSR industry metrics that you can sort of benchmark yourself against to see how efficient your stores are?
Well, I mean, I don't know, like other chains to my knowledge don't provide those types of metrics, but from our own internal metrics, we target, at least $100 per hour per kind of person. However, we can go up to three or even $400 an hour per
Of
person
revenues
of
like one
revenue.
person can handle up to $300 to $400
Yeah,
per hour of revenue.
yeah.
Wow.
Now, I mean, granted, it's gonna be hard work. I'm not saying that they're not gonna be busy, but the
Yeah.
point is that it can be done, and
Yeah.
we've done it many, many times. We've seen it being done. We obviously don't want to put our staff in a position where they're feeling like they're overworked. So it's not necessarily our goal. But the point is, like, sometimes you can have a big group walk in out of nowhere, 2 in the afternoon on Tuesday. You
Yeah.
think it's dead, and all of a sudden you have to do like a whole bunch of orders, and you don't have time to call someone in.
Yeah.
So if so, the point is by empowering the staff through technology to be able to service those customers, that is huge. And if we can, continue to invest in the automation technology of the restaurant, could we bump that up to $1,000 an hour per person?
Yeah.
Do we even
Yeah.
need a person there at all? So this is kind of where I think the future of the restaurant industry is going, and I think Augburger can be a driver of that.
You talked about your fully automated burger maker, I guess. Is that call it that, or does it do lots of different things than just burgers? Does your McNuggety things, or like that machine you showed us the schematic on? What does that do? Is that a big burger maker, or what does it do?
So that machine is just garnishing. So that
Oh,
means
okay.
garnishing would be putting your sauces, your produce on. So whether that's a
Okay.
burger or French fries or a wrap, or it could really be anything.
Yeah.
So, and there's a lot of technology that goes in there. There's like AI vision for like is it putting it in the center of the wrap, or where is it going, et cetera, making sure things are properly aligned. We've put a lot of work into that initial prototype, but really the point of that, and this is where we're going to see the biggest bang for our buck, is that it's going to get us to that sort of milestone of mass customization, right? The idea that you can customize something on a large scale, and you can have that anywhere you want. So that will be the first step, is just getting that one machine going, and we can basically replace our prep table with this new machine. There is a second, third, fourth step, but like we really just want to do one thing at a time.
So the consumer goes up, punches their order in, I want extra pickles or no pickles, and then the machine would then automate do it as exactly how they want it.
Yeah, it could be on our kiosks, or likely through our app.
Yeah.
You create the burger that you like. I like my burger a little saucy. Like I want like 9 mils of sauce, and I like extra pickles. I like 6 pickles and a little light lettuce, maybe 20 grams of lettuce or something.
Yeah.
And not only that, but you could also have a model where you sort of can pay for what you use, like which if
Yeah.
you use less ingredients, you should pay less. If you use more, you should pay more. So we can really kind of, again, also make the economic model match what the consumer's getting.
Would this automated equipment, would that be a new business line where you sell that to other QSRs, or would that be just kept internally?
I think that's it's possible, right? It's totally possible this could be made available to other chains. The technology itself, I think would be highly desirable, right? So, really we want to start by using it in our chain, start by testing and developing in our own chain.
Yeah.
Because again, there's also another side to this, where there's a huge benefit to keeping the technology proprietary and keeping it in-house, and giving our restaurant like a big advantage over others. So
Yeah.
there's sort of like there's obviously going to be a decision to be made at some point, but I think there's no right or wrong answer. It's just it just depends on our strategy.
What I was impressed with your board is a very franchise and food experienced board. So they really do seem to know the industry well. And I don't really have a question on that. It's just kind of commenting and highlighting that. Anything you want to add, or I guess, is there any other like, you don't have a big board. Are there any other experience type of expertise you would like to bring on the board to really flush out the strength of the team?
Yeah, I mean, like I'm definitely looking at bringing on, someone that's also in the tech space. I mean, Francois is a tech investor. He's a tech guy, so we do have that. But I want to bring someone that is more focused on robotics and automation, as well, because I think that's going to be obviously an important part of our growth strategy. So we're always looking to make sure that the board aligns with where the company wants to go. So I think we're obviously open to hoping to find someone that's gonna help us push that forward to new levels.
In terms of your expansion, I think you did mention international expansion beyond the US. Is that more of a longer term goal a few years out, or is there anything potentially in the nearer term on that?
Yeah, so we did announced previously that we'd signed, a letter of intent to open in India. So we had quite a bit of interest to expand this very quickly internationally. And things kind of changed with inflation, interest rates, and the economy, obviously the past 2 years, we had to shift our strategy a little bit and really just focus, I think, on what we're doing here in Canada. And I think it was the right move at the time. But that being said, looking to the future, that we don't want to be just a Canadian fast food chain. We want to be a global fast food chain. So international expansion obviously is a big part of that. And we're looking to resume those expansion initiatives that we started.
With your growth strategy, while it's lower cost or low cost given the franchise model, growth is still expensive. You've got to support things, you've got marketing and so forth to do. Do you have the balance sheet and you're almost at the break even level, or kind of are at the break even level? Or do you have the capital required to grow it? Or are you going to need additional infusions of capital to really hit the gas?
Yeah, I mean, we definitely do need additional capital to hit the gas and to develop some of these technologies to really get ourselves properly launched in the US through various marketing initiatives or potentially partnering with influencers slash celebrities. So the capital is going to be very, very important for that. And we currently actually have a convertible debenture on $4 million convertible debenture, and which is actually convertible at a lower price than we're trading at right now. So I think definitely an attractive offering that we're hoping to get even more interest than we've already received.
And you talk about your international growth or just growth in general. Are you wanting to get to, like, do you have a near term or a medium term goal of like 100 stores or 500 or 1,000, or do you expect you'll get to a certain point and then there's potentially a natural consolidator that would like to pick you up, or how far do you want to run with this?
I intend on keeping the company forever.
Okay.
I really don't ever see, an endpoint for us because fundamentally, and this is where I go back to it being at the heart of a technology company. And the technology that we're going to develop really has no limit to where it can go. And the development of that, in my opinion, will continue on forever. Because as a tech company, we want to be always at the cutting edge of our industry. So, my intention really is to keep growing this into a very, very large company, very advanced, sophisticated company, and a company that's really going to change the world in a positive way. So, for me to stop doing that and doing something else would kind of be pointless.
Over the next year, or what sort of milestones or news should investors be keeping their eyes out? It just announcing new distribution agreements in different states or provinces. I don't know, store openings, new products, new like food retail distribution outlets. What kind of things should we be keeping do you hope to achieve in the next year?
Yeah, definitely more store openings. We opened 4 restaurants this month alone. So, kind of demonstrates that we can do it. We can grow very, very quickly if we need to. So new store openings will be continue to happen. Definitely new distribution agreements. As I said, we're really focused on getting some larger national distribution agreements for our CPG line, so that can be really exciting and game changing if we secure some of those. And I think most importantly, for me, not necessarily most importantly, but another very important part of our strategy is really to start development of our automation prototype to really demonstrate the technology and build this prototype so people can see it. Because I think once people see it, they're going to realize that, wow, this is just a game-changing technology that I need to be part of. So and really the goal there is to kind of transition our franchisees into being like almost like tech investors in a sense, like they're almost just buying a technology package and helping to run it and monitor it and maintain it, of course. But again, changing the paradigm of what a restaurant is and what it isn't is going to be a big part of our strategy this year.
We've covered a lot of ground, James. We should be wrapping things up here. Or is there anything you want to highlight before we go, or final comments to put a bow on it, so to speak? I'm passing over the mic to you for final thoughts.
I think most importantly, you know, if you look at our stock in the past month, you know, you'll see the strength of it. And really, what does that represent? You know, to me, it represents that people really are believing again. Investors are believing again. People are understanding that there is tremendous potential and a huge future in what we're doing. And you know, the plant-based industry obviously has struggled. There's been a lot of failures, a lot of bankruptcies, a lot of companies that have come and gone. But the question is who's going to remain and who's going to be here in the future? And what I believe, and I think what our investors believe, is it's going to be Oddburger. We're going to be definitely one of those really pivotal, critical companies that is going to lead the industry into something much bigger and really, you know, I think potentially give very significant returns for people that do believe in what we're doing. So, you know, and again, I'm very, very grateful for all of our shareholders and all our investors that have continued, that stuck with us for the long term, that have, you know, believed in us and that continue to believe in us and that continue to invest in us. So I think it's a very, very exciting future, and we look forward to meeting lots of new investors.
James, that was really good. That was a great story, interesting, and I like that. Thank you. I appreciate the time, and I look forward to you coming back here and giving us some updates as the business moves forward. Thank you very much.
Thank you so much. Appreciate your time.